But to talk about the markets, how they are positioned and more, let's bring on board Mr. Santosh Meena of Swastika Investmart. Hello, good morning. Welcome to the show, Santosh. Now, we were talking just yesterday, how the markets, even though they are seeing good run up, the kind of move, the pace of increase has slowed down over the last three sessions. On Monday, I think Nifty was up over 2%. Tuesday, it was up somewhere around 0.8%. Yesterday, it was up 0.4%. And today, it's down. So, is it time to turn cautious, or is it the consolidation that the market was hoping for?
Yes, first of all, good morning, everyone. So it is the nature of the market. If there is a breakout because of any event, market rally for 2 days, and on third day and on fourth day, it tried to consolidate or pull back. But the view will remain bullish around psychological level of 21,000. Nifty is consolidating, but yesterday's low of 20,850 is acting as an immediate support. If it will be held, then we can expect a intraday recovery. If Nifty slips below 20,850, then 20,660 will be the next support level. And on the upside, 21,000 is an immediate target. Above this, 21,175, 21,320 we can expect on the upside. So view will remain bullish. Because of the weekly expiry, Nifty may consolidate in today's trading session. Yesterday, Bank Nifty underperformed because of the weekly expiry. But if you look at the data of the FIS, yesterday FIS bought 2,000 crore in index future, where 1,500 crore was in Bank Nifty future and 500 crore was Nifty future. But despite that, Bank Nifty ended into red just because of the weekly option expiry. So I'm expecting Bank Nifty may rebound today in second half. We may see some buying from lower level. So I am on the bullish side. This consolidation is a buying opportunity.
All right, so markets, in fact, markets may move higher on the back of a rally in Bank Nifty, which was, by the way, down about 650 points in the last two sessions. We have, in fact, slipped below the 47,000 mark, and Bank Nifty currently, as we speak, is below the 46,600 mark as well. Now, we'll keep a track of that, but Santosh, shifting focus to the broader markets, they are also, showing signs of exhaustion, where we are seeing big dips on an intraday basis in the last two sessions. What's the view there? Is it time to, turn cautious on the broader markets, given the kind of run we have seen in 2023?
Yes, 2023 was all about broader market, large cap underperform, but from last 1 week or from the beginning of November series expiry, December series expiry, broader market started to underperform, and large cap pick up because generally if FIs are buying, then the money generally moves towards large cap. So we are seeing some profit booking and consolidation in the broader market, but yes. In coming days, investor has to be very stock specific in broader market. Not every stock will rally. Large cap will outperform, but some stocks will do well in broader market. Like you can see today, power stocks and yesterday fertilizer stocks were doing well. So you have to identify the theme and right stock to ride the rally. But not every stocks will participate in this rally.
Now, shifting focus to stocks, and I think one of the stocks that we need to talk about this morning is Paytm. The stock hit a lower circuit of 20% this morning, and it was a worst day for the stock since its listing. And from what I see, it has made some bit of a recovery. Currently, it's down about 16% at about 685 sort of levels. Now, this is on the back of the company announcing plans to scale back small ticket loans and recalibrate its buy now, pay later business. Given the kind of fall in intraday correction that we have seen in today's trade, and given that it's a big shift from a business perspective for Paytm, what would be your view there? Should we wait for some further clarity as to where the focus will now perhaps shift to, or is it a good opportunity regardless?
Fundamentally, if I talk about, there was a turnaround in the financials, but this news is acting as a roadblock for the stock. And today we have seen a major fall in the counter. But technically, if you look at from 440 to around 1,000 level, there was a rally. Now, exact 61.8% retracement comes around 653 level, and today's low is around 650 level. So it is an important level to watch out. I'm expecting, if you are aggressive investor, this correction is a good buying opportunity. After this fall, there is a favorable risk reward ratio. Keep a stop loss of 640. If this stock will bounce back from here, 800 will be the first target, and we can expect 880 in the upside if there will be any recovery. So you have to be aggressive and you have to be little patient for in this counter.
All right, aggressive and a little patient in this counter.
It's counter. Good morning, Santosh. I'd like to drive your attention to another stock that is in the news, that is IDFC First Bank. It is down today as I speak around 3%. Now, it's in the news because Cloverdale Investment, which is an affiliate of the private equity firm Warburg Pincus, is likely to sell 1.3% via a block deal. The deal could be worth about $100 million with a floor price of 85.7. Right now, the price of the stock is hovering at 87.65. What do you make of the stock? It's going down right now. Does this deal spell good for the investors, or they should just wait and watch?
Yes, the deal was, I think, done in open market. That's why stock is down. If the deal was done in pre-market, then I think the stock could be in the green. But yes, this correction is a buying opportunity. The technical structure is bullish. There is a classical W bottom formation, and in today's pullback, it tested it 20-day moving averages, and now it is bouncing back. So I believe you can buy at current level, keep a stop loss of 85. It can recover towards 92, 96 levels. So this correction is a buying opportunity.
Santosh, another stock which is up for sale, which the stocks are being up for sale, is Indian Railways Construction International, or IRCON. Now, the government is likely to sell 8% of its stake via an offer for sale with a floor price of 154 per share. Right now, the share price, even though it is down almost 13%, 7.5% today, 12.95, 13 points down at 159. They are likely to sell it at 154 per share. The 8% offer for sale includes a base price of 4% and a green shoe option of 4%. IRCON, is it an attractive stock?
And I mean, the kind of returns, phenomenal returns that we saw in 2023, it's a multi-bagger stock, has risen about 166% year to date, but a big fall today of 7.5%.
Yes.
Time to buy perhaps for long-term investors?
Yes, stock is correcting today because of this OFS news. The stock has already rallied around 170% this year. I believe it may consolidate for some time in the range of 180 to 150. But after a period of some consolidation for 15 to 20 days, it may again see a momentum. So if you are buying for the long-term perspective, this correction is a good buying opportunity. But if you are looking for from the trading perspective, avoid, because it may spend some time in the range of 180 to 150.
Like we mentioned, it was a multi-bagger over the last year, almost 150% up. It is at 158. The sale price is at 154. The 52-week high was 180. Do you see that, the stock touching that in the near term?
Yes, I think around 150 it may take support, and after taking support around 150, 155 zone, it may bounce back towards 180 level. And once it will cross 180, then we can expect fresh round of bullish momentum. But for timing, it may remain in this range, or I think in next 15 to 20 days, it can head towards this 180 level.
And Santosh, another stock is Adani Ports that we wanted to discuss. What a tremendous rally we have seen in this counter. In fact, in all Adani stable group stocks, the 10 listed entities. Now, focusing on Adani Ports, there are a lot of news flows as well. Now, from what I understand, Adani Ports is looking to buy, Shapurji, Palunji Group's ports in, in Odisha. And, there was a city buy call yesterday. They have raised a target price. In fact, the stock has rallied somewhere close to 25% in a matter of 5 sessions. Time to book profits?
No, I don't think you should book profit in hurry because there's a multi-month breakout in this counter. It may see some consolidation and then it will again resume its uptrend. So better stay with this counter if you are long-term investor, where 980,000 area will act as an immediate support zone. And once it will cross 1100 level, the next target will be 1225.
Stay with the Adani Ports for now, according to you. What do you recommend, your picks for the day?
I'm not recommending for the intraday, but I'm recommending for a medium term. So first stock will be my Bank of India. I'm seeing a beautiful breakout in entire Nifty PSU Bank Index. And Bank of India, after its IP launch, now it is breaking out important resistance of 115 with a strong volume. I think this momentum is likely to continue. So you should buy this counter with a stop loss of 110 and the target will be 140. And now metal stocks are also showing some bullish momentum after some period of underperformance and consolidation. We are seeing some buying momentum in many metal stocks. So Hindu Copper is my pick, where 200 is the target, 170 will be stop loss. And from large cap banks, I'm bullish on the financials and banking, especially PSU banks. So SBI, my third pick, where 660 will be the target, 590 will be the stop loss. And from private space, private sector bank, RBL is looking very strong. Despite 2 days of underperformance performance of Bank Nifty, RBL Bank is outperforming, and there is a likely breakout of flag formation. So where I'm expecting 275 as a target, 245 will be the stop loss. My last pick will be the polymer from the broader market. It is also witnessing a formation of flag formation breakout, where 1800 the target, 1600 will be the stop loss.